Good evening, everybody. It's Keuka Lake. Keuka Lake. Yep, nice weather up here. It's actually only in the 60s today. Nice and sunny and cool. All right, hope everybody's having a nice summer evening. This will probably be relatively short since the market seems to be in the summer doldrums. As you can see, the Dow, for the first time, has had a down day, I think, probably in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The 11th day was a down day. So might be a little bit of consolidation. I say lethargic trading because, as you can see in the NASDAQ, we're basically just going sideways. Same scenario in the S&P 500. Crude oil, pretty much just going sideways. Gold. Oh boy, let's see. Gold. That's probably not the right contract. Gold just kind of choppy for the last few days. So there's really not a whole heck of a lot going on. That's good to be at the lake, not missing all that much. So anyways, the ones that have been working successfully for us here, we recommended ECPG today because of the obvious signal, the kicker signal. Probably going to be continuing this uptrend. And that was our same scenario over here on SONS. Kicker signal consolidated today back to the 200 and then took off again. I would suspect your next target, it should be up here at least to the 50-day moving average. MYGN, that's a good-looking chart. You can see how it's come back up with some indecisive trading through the T-line. Let's make this smaller. Shows a good wave 1, wave 2, wave 3 in progress. And we recommended KEM today based upon this wave 3 in progress. That slow curve breakout. Oh, we haven't even taken pictures of the lake. We're going to take pictures tomorrow. Andy forgot to. Everybody was here, and I was obviously sitting in front of the screen the whole time. All right, we showed a lot of high probability trade setup. For example, look at this is what we call the message. Notice when Apple gapped up and started trading off. Let's make this a little bit bigger. It may not be the time to be buying, but when was the time to start buying? Look at our Doji Harami, and they opened up positives. So what was the message? That even though they gapped it up and started trading it off, they gapped it up. That still showed that there was very strong demand for Apple, especially after their earnings. So we look at chart situations like this. This is why we go after the kicker signals. look at Vonage with its kicker signal breakout. So this here kind of is like strong indication there's been a major change of investor sentiment. And so we know what the statistics or the probabilities are after a kicker signal. A lot of strength. That again was the reason why we went after SONS and ECPG. And might want to take a look at MDCA tomorrow. Again, where the kicker signal occurred, right smack dab off the 50. More than likely, you're going to be right back in that trend trajectory. CNAT, another one that's doing a bullish doji sandwich, another very high probability trade setup. Look where this started. Right about the same level it bottomed out before. Where's our next likely target? Probably can bring you back up to this level, at least anticipating there's a trend channel in progress. CLMT, we had recommended that earlier. But when it came back and did this, notice what it did today. Started right back up again. Our J-hook pattern, they could never close this back below the T-line. You can get ready to buy this one on positive trading just because of the J-hook pattern. And KTOS, there's our little cradle pattern. And the cradle pattern is very easily recognized based on, look at the flat trading range of dojis. Remember, if one doji means indecision, a series of dojis means greater indecision. This one, I wouldn't be afraid to start buying immediately on a positive open tomorrow. And SKX. This is one where you're kind of getting set up to be ready to buy, that if it comes up through this level, especially after bouncing off the 50-day moving average, essentially what do we have? Wave 1, Wave 2, Wave 3 breakout, just a high probability trade setup. All right, the biggies, like Netflix, still drifting lower. So right now, you don't want to be in Netflix. It wouldn't necessarily be short Netflix, just wouldn't be long. And we shorted, make this bigger, shorted IBM last few weeks ago. Whoops. Started covering down here. You're starting to see strength. Netflix. Oh, that's right. I think Sandy just said Netflix or Disney pulled out of Netflix. Disney's going to do their own streaming. Wonder what, did anybody see what Disney is doing? What am I looking at here? IBM. IBM, we covered it. Now look what happened when it hit the T-line. So we probably got a wave 1, wave 2, wave 3 downtrend in progress. Oh, let's see. Amazon. If you're short, you can probably stay short on this one. long as they don't bring it back up above the T-line. And or if you want to go short, you can kind of see there's a support level right in here. If they break down through there, where's your next target? Down in this range. Disney's down $4. All right. Uh-oh, I need a little bit of light so I can see the keyboard. Thank you. So Disney is down in this range. Notice what started selling Disney off. There's your kicker signal to the downside. So Netflix is down 5.5. Down 5.38. That means you're down here in this range. So it's probably coming back to fill the gap, which would kind of correlate with the 50-day moving average. Tesla, ever since it's done this bullish doji sandwich and then another bullish doji sandwich, that means there's still more upside in Tesla. Still should be in a steady uptrend. NVIDIA. Looks like it's trying to come out of this slow curve setup. Got a doji sandwich, did some backing and filling, and I don't have the 3T line on this chart. I don't know why that happened. Labu, still telling us there's really no enthusiasm right now in the biotechs. And Nugget, telling us there's no great strength in the in gold prices right now. So it looks like they could bring Nugget all the way back down into this area. All right. Now on the short side, I know some people in the options room had been short PI because of the dumpling top. Bam. Get that big move to the downside. And Depot, same scenario. You see the big dumpling top, then the slam down. So this is why we look for these either slow curve or dumpling top setups, because that's where they can really pull the plug. Let's see, who's writing these things? It's terrible handwriting. Whoops, that's not it. Same scenario on PAA. Big dumpling top slam. So this is the type of setup you want to be looking for. There, notice our various doji sandwich telling us there was more downside. This becomes a very simple entry strategy. But if we see a move to the downside, a dumpling top and a doji, that if it opens lower, you could be shorting it. Do we know if it's going to go to here, here, here? Not really. All we know is that we've got the prospects of it heading down lower. EHC was showing this one as an illustration of, notice what started the downtrend. There's that bearish kicker signal back down through the T-line. Now they've gapped it down in the oversold area. If you'd been short, now you start watching for a buy reversal. Remember, very simply, the Japanese rice traders tell us that if you see a gap down in an oversold condition, that's the basic analysis of candlesticks. It's a Japanese rice traders provided for us is where do most people sell? They panic sell at the bottom. KRO, kind of the same scenario. Notice got that doji gap down. This one has the prospects of coming all the way back down to the 200. What did I just do? Crow. AERI. Kicker signal, an AERI to the downside after a dumpling top. Good possibility they're sending this down to the 200. Let's see, I think this is Avis. Avis, kicker signal. This one can be shorted. First target, 50-day moving average. So anytime you see a kicker signal, remember, it's the strongest of all the individual candlestick signals. There's another slow curve breakdown on ARNA, A-R-N-A. Another one you could probably be going short on weakness tomorrow with the idea that if they're coming back to fill this gap, they're probably heading down to test the 50. COTV. Here's a very high probability setup. We were showing the statistics of what happens after a big down move. Well, notice what they did. They tried to take it back up, and they dropped it back down. You can be shorting this one basically due to the doji gap down. They're still heading lower on this one. CC, there's your proverbial evening star signal, another one that can be shorted on weakness tomorrow. CTL, again, there's your kicker signal. It kind of breached this level today. I would now anticipate your next target is at the bottom of this trend channel. We recommended going short on NBR today because of that rounding dumpling top with the ultimate failure right here with a shooting star gravestone doji just as it hit the 50. So what do we got sitting right here right now? There's your bearish candle with a doji. Extremely high probability. If they open it lower tomorrow, you can be shorting immediately because tomorrow's trading range will be like this, taking you down here, which means this area has been breached. Look for more downside. And we recommended going short on CBI, kind of the same scenario. You can see the rounding top. It popped up a little bit today, but closed back of the doji. If this opens lower tomorrow, you can be shorting it. So right now with these market conditions, especially with the Dow looking like it's going to take a breather for a few days, we don't know whether it's just going to come back to the T-line or come back and fill one of these gaps. But if they start selling the Dow off, and after today's doji in the NASDAQ, makes it very simple. They're going to move the markets in the direction of how they open it after the doji today. If they open it lower, probably going to start being a little bit more oriented toward the short side. So that's about all I got tonight. It's kind of a lethargic market, but that's not unusual for the summer doldrums. So with that, is there any, aren't those more shooting stars than dojis? Oh, you can call it whatever you want to. But remember, where does a shooting star occur? When the stochastics are in the overbought condition. Sell in August and go away? Pretty much. I think it's not go away. I think it's just everybody has gone away. Seems like there's a lot of short setups. Yes. So that's kind of an indicative of what the market nature is, that if you're doing your scans and you're not coming up with very many long positions, even when the market was still slowly moving up, then and you start to see much better short positions, that's where I say observe the obvious. That's telling you that the force to the selling side is starting to pick up some steam. In one of your training vids, you mentioned that buy signal and bullish futures equal buy immediately. Where can we find particular futures of a stock? Where can we find what particular futures a stock will be related to? MT, if you're looking at the crude oil, obviously the oil stocks will be related to that. If you're looking at gold charts and seeing which way gold is going, you're going to have the gold stocks moving. So whatever particular commodity or futures that is related to a sector, you're going to get much better strength or weakness based upon what's going on in that that sector or that futures. Oh, I almost never get a good trade with a short, so hard to get shares in the first place. Yeah, Guild, usually that's why if I'm going to short something, it's going to be something that has big, huge volume. Remember, the supply of short stocks come from your brokerage firm, that anytime you sign a margin agreement, in that margin agreement it says that if they want to borrow stock from you, they can pull it out of your account and lend it to somebody, and when it's covered, they put it back in your account. So sometimes if you've got a stock that only trades 230,000 shares a day, it might be that the brokerage firm you're working with may not have any of that stock in a margin account someplace. However, most brokerage firms have agreements with other brokerage firms on the street that basically say, if we need to borrow some stock for you to lend to somebody for a short position, they'll lend it to you, and when you get it covered, they get it back to you. So they have cross agreements. The only reason they say we don't have it is if you really want to go short something, they can go get it for you. But instead of them being able to just do a quick transaction, now they have to do extra steps to go find that stock for you, and they usually don't like to do that. Yes, you can buy puts. Okay, so with that, let's go ahead and do the double line, Jim, and just keep your picks to one each tonight. I've been talking for 2.5 days straight, and I know you don't want me to fizzle out. And Jim, go ahead and do. That's all right. Do your next double line. The VIX looks like it's starting to pick up some steam, obviously. Kind of indicating you might have a pullback here pretty soon. Facebook. Slow uptrend. All you can really do is if you're long, you stay long, just have a stop below the T line. Let me see. Whoops, I scrolled way past me. Whoops. EBE. Yes, you had a scoop pattern prospect. It wasn't a very clean scoop pattern, but it was a scoop pattern. But remember what we say about the probabilities. The probability is pretty strong. You could have a scoop breakout. If this was the candle that was telling you the bulls are definitely taking control. They shouldn't close it back below this level. Plus, with it closing here, showing you, now the scoop's not working. Close out the position. Remember, the charts are not only going to give probability trade situations. You got to always remember the word probabilities. So the other aspect of successful trading is that if something is not working, close it out immediately. And we can see when something's not working. Short on Chipotle, yeah, you got kind of a bearish J-hook pattern. And notice what's happened ever since they started selling this. They've never been able to close it back up above the T-line. Let's see, I think T-Doc, did it sell off pretty hard today? Oh, it came back up today. So look at your long or your inverted hammer. Remember the statistics of your inverted hammer. But if they start trading positive after an inverted hammer, you probably got about a 95% probability that it's going to continue to go higher. On, all you can do is stay long if you're long. I wouldn't be long or short right now just because it's still kind of caught in the sideways trading range. But if you are long, don't let it close back below the T-line. If it did, two things. You're back below the T-line one, and the trajectory to the upside has disappeared. Yes, you can short McCormick on any weakness tomorrow. Bearish J-hook pattern. J.C. Penney. Oh. J.C. Penney, not very vivacious. I think that is a dark candle. If it opened lower tomorrow, I'd close it out. You can see how it's topped out here. If it does anything indecisive, I'd close it out. And then just be ready to buy it if it comes back up through that level. BRS wouldn't be long or short. There's just nothing there. JMEI, another one. Here's a perfect example that if you were buying today based upon it breaking out of a fry pan bottom, where should it not close? Shouldn't close back below the 50. I can't tell whether, it was up 2 cents on the day. If you went long, it has to open positive tomorrow to stay in it. If it opens lower, close it out. It's telling you they aren't coming up through the resistance level. ESPR has to open positive. That's more of a little scoop type pattern. So now we know what should happen after a doji. It has to open positive and trade positive to stay long. EXEL. Just stay long if you're long. Good Facebook, good VIX, ACM. Big breakout. But look where it hit today. This is one of those that if you happen to be buying this one on the positive open, as soon as it hit your 200, you flip to your 10-minute chart and see what happens. Now, you've got a big breakout. We know exactly what to do. The probabilities are that if you're going to stay long, it has to open positive and trade positive. If it opens lower or opens positive and trades lower, you close out the position. LC. Look for a 45 degree. Same scenario. It has to open positive tomorrow. If it opens lower, take your profits. You can always buy it back with a much higher probability if it comes back up through today's close in tomorrow's trading if it opens lower. DSW, slow curve. You can be buying this one. Still looks like it's heading for the 200-day moving average. J-hook pattern on METC. You stay long. Wouldn't be buying here necessarily, but you stay long as it continues in its J-hook pattern. Freeport, it has to open positive and trade positive to even think to stay in it. If it opens lower, your prospect of a fry pan bottom, a J-hook pattern has disappeared. If it opens lower, now you're back into the slow drifting downtrend. I think, didn't we do GBT? Yes, you want to be out of this one. What is futures for Facebook and tech? It looks like it's still an individual assessment that they need to stay above the stay above the T line. Oh, okay. MYGN came out with earnings and it's down $2, so it means it's back down here in this range. Watch to see how it opens. If you're going to stay long, it has to open positive and immediately start trading up. If it kind of waffles, you close out the position. MTSI looks like it's trying to bottom. If you had been short today's Morningstar signal, especially with a close above the doji in the oversold area, you should have covered your short position. If you're going to be a buyer, you'd be a buyer on a short-term trade basis, anticipating it's going to bounce back up to the T line. We did Tesla, MRAN, MRAM. Another one that if you've been short, doji in the oversold area, should have covered it. You can be buying this one on positive trading because it'd be breaking the T line in this downtrending channel, but obviously watch to see what goes on at the 50. Was long on. Yes, if you were long, so here's where you observe what happens in a candlestick signal. If you were long this J-hook pattern and they gap it down below the open of the previous day, you close it immediately because that's exactly, unless they open it and immediately start trading positive, if that's the case, you still put your stop at where it opened. Because if it came back down through there, after gapping down below the previous day's open, that's telling you there's been a drastic change of investor sentiment. UUP, the dollar index, looks like it's in a slow uptrend right now. You can stay long on this one. FedEx. Get ready to short this one if it opens weaker, your bearish J-hook pattern. I told you that this was not an inverted hammer. I don't know why I would have said that. It is an inverted hammer. Unless it wasn't at the end of the day when you asked the question. LNTH, that's a toughie. If you went long and you're long, you can stay long. Just don't let it close back below the T line. Kara never executed. Had that nice big pop. Again, the percentages tell you if you've got a strong move, get ready to buy it if it continues its strength. If it opens lower, you don't buy it unless it comes back up through this level. Since then, they haven't been able to bring Kara back up. looks like it's a J-hook prospect. Again, kind of another inverted hammer prospect. You can stay long. If you like it, you can be buying it with the anticipation it's coming back up through this level or up to that level. Vida, this is that breakout situation. And notice where they consolidated to, almost right back, smack dab to the T-line. Now you can still be buying this one if it opens positive tomorrow. Remember, once they consolidate and bring it right back up, that gets a lot of the sellers out of the way. Chegg, all you can do is stay long, use the T-line as your stop. Yes. So that is the reason I say when you see it gap down, close it immediately, because that's not what it should be doing. That way, instead of sitting there saying, oh man, I hope they take it back up and then get out, and it goes lower, and you say, ah, shoot, I should have closed it here. And then finally, at the end of the day, you see they're not taking it up, you close out the position. Whereas on the other hand, if you close it immediately, you can always buy it back on strength, but it shouldn't be gapping down below the previous open. Then when you close it out, then you can start assessing what is it doing, what's doing a bearish kicker. So whatever loss you took from owning it here to selling it here, you may get it right back again by going short. Yes. So good prospect of going going the other way. DSLV, the inverted silver, inverse silver, has to open positive and trade positive tomorrow to stay in it. If it opens lower, close out the position. Okay, kind of a lethargic market, but I would suspect summer doldrums and the fact that you had, you had 10 plus positive trading days. Japanese price traders say the probabilities after 10, I think after 7 or 8, is that it's probably going to show some, you got a high probability it's going to do some pullback. Yes, we just discussed ACM. We just said that if you had bought this and you saw it hit the 200, you flip to your 10-minute chart to see when it's time to sell. So now the probabilities say if it opens positive, it needs to trade positive to stay in it. If it opens lower, probabilities say close it out. You can always buy it back if it comes back up through the close. We have one of those darn blow-up mattresses that automatically sets itself up. Last night it decided it wanted to lose air most of the night. So, all right, everybody. It's an early evening. We'll see everybody bright and early in the chat rooms tomorrow. That's right, my pillow.